Hello traders, welcome to the third module of the Advanced Technical Analysis course, Chart Patterns. And in this lesson we're going to teach you how to trade the head and shoulders pattern. And remember, the head and shoulders is one of the most powerful reversal patterns you can find on your charts. And it takes a while for a head and shoulders to complete, but when it is complete and it breaks out, you will be in a very high probability trade. So let's go through it. Head and shoulders, entries, stop losses, and targets. Let's start with the entries on the head and shoulders. Of course, you must wait the breakout of the neckline for you to be able to trade it. And head and shoulders is the most powerful reversal pattern. We already said that. And in an uptrend, after a retest of resistance, price fakes out just to retest it again, creating the pattern. Remember that a fake out is when price actually breaks through the resistance area but comes back down the resistance area. Okay, that is called a fake out or a fake breakout. And this is what we're looking for. And when we are in a head and shoulders, a test of resistance, then a fake out of that resistance, and a test again of the resistance, creating the second shoulder. And the same is true in a downtrend at support, and this is called an inverted head and shoulders. An inverted head and shoulders will test a support zone, then fake out of the support zone, then retest it back to create the second shoulder of the pattern. And here's an example of what a head and shoulders looks like. As you can see here, we are in an uptrend and we tested this area of resistance just to fake out of it a big pullback and a retest of the area. Once we break with the neckline, we have a signal to go short on this instrument. And the neckline is always the trend line that joins the two lows of the pullback in a head and shoulders, or the two highs of the pullback in an inverted head and shoulders. As for the stop loss levels, the stop losses should always be above the pattern's head. And this is simple because let's imagine that we are here and we are waiting for the completion of the pattern and the breakout of the neckline. And as in this case, it breaks below or price breaks below the neckline, okay, and we go short. And if we put up too tight of a stop, meaning that if we put a stop right here, right above the neckline, we might get stopped out when price comes down and comes back up to retest this trend line as resistance, and then going down and reaching our targets. So if you take too much of a tight stop loss, you take the risk to get stopped out, and or to get stopped out on a winning trade that would have reached your targets. So and remember that stop loss levels are levels or price levels that completely invalidate your trade idea. So if we go short here and price retest this high of or this shoulder, we are still good on our short idea. But if we break with this high right here, it will mean that we will be making higher highs and that our short idea is no longer valid. So when we have a breakout and an entry, the stop loss should be above the pattern's head. And in a bearish signal or in an inverted head and shoulders, the stop loss should go below the pattern's head. Now, to calculate the targets of a head and shoulder, you should measure from the head or the top of the head to the neckline, from here to here. And once you have your measurement in pips, you should extrapolate it to the breakout zone, giving you the targets of the breakout. Remember that this is also a Momo setup, meaning that we want to profit from the momentum of the breakout. We are not looking for a swing trade out of it, we are looking for our target. So if you plan your trade, you should trade your plan, and if you have your target set, you shouldn't move them, and you should exit your trade at those levels. Now let's go through a trade analysis, okay? This is an example of a head and shoulders. Now as you can see here, we are in an up move and we made this high at some resistance area, okay? Then we pull back to make this low, and we continue to the upside, making this high. Now remember, at this stage we don't know if we are in a head and shoulders, okay? Because we made a high, then we pulled back and we broke with this high, making a new higher high. Now if we pull back to around these levels, for example, it would mean that we are still in an uptrend and we are due to make a higher high, okay? But when we pull back to this area, to this same area of well, support, or to the same previous area of a pullback, we start to see a head and shoulders forming, okay? We have the first shoulder, then the head, and now we have pulled back to the same pullback area to try to make the second shoulder. And in this case, we do make the second shoulders, the second shoulder, and we reject this area of resistance right here. Now our head and shoulders is complete when we have a breakout of the neckline, okay? When we have a breakout of the neckline, we have a signal to go short. But the first thing we're going to do is we're going to measure our targets. And by measuring our targets, I mean we're going to grab our crosshair tool and measure from the top of the head to the neckline. And in this case, we have a 120 pip range, and we're going to extrapolate it from the possible breakout area or the neckline to get our targets, okay? And this in this case, these head and shoulders can yield 120 pips. It's something to look for, because to get clean 120 pip moves is very rare, but if you are patient enough, you will be able to get them with some head and shoulders and these patterns breakout. Now when we get the breakout, we have a signal to go short, and in this case we can put our stops above the pattern head, giving us a 1-to-1 risk to reward in this trade. Now all you need to do is be patient, and when you start seeing things just like we saw here, I mean a test of a resistance, then a pullback, then a higher high, and when you get a complete pullback to the same first pullback area, you can start looking at the chart more closely, because you might be in a head and shoulders, or price might be creating a head and shoulders, meaning that we might be getting a great risk to reward and a great trade with a high probability ratio.